Saudi Arabia cut the February price of its flagship Arab Light crude to Asian customers this week following concerns about supply overhang. Meanwhile, the oil is giving up some gains as Middle East supply concerns from the Israel-Hamas war weighs heavily. Meanwhile, Kola Karim, the chairman of Shoreline Group, joins me now to discuss the production and pricing dynamics at play, as well as shifts in the global oil architecture. Thank you so much for your time today, Kola. Let's first start with your outlook for the sector this year. We're seeing quite a lot play out already coming from the fourth quarter of last year into this first quarter of this year. And I'd like to get your thoughts on how you see things playing along down the line this year.
Thank you very much, Kenneth. I think first we should look at the dynamics of what's happening globally. Inflation and cost of borrowing is very high, and which is going to put pressure on global economy across board. So if you take that into context, you look at a pricing forecast of between $75 and $85 for the year 2024.
Definitely quite a lot. But then when you look at also the dynamics around the cartels for this sector, we're looking at OPEC on one hand and also looking at the BRICS nations also having some new strategic members coming on board, and that will have some impact on the oil and gas industry. I'd like to get your thoughts around this.
Look, it's very important that Nigeria pays attention to what's happening on a global level. There's a lot of alignment and realignment, and you've seen it. If you look at BRICS, you have Iran, Egypt, UAE, Saudi Arabia have joined BRICS. Nigeria is not there. On the other side, if you have OPEC, that's producing about 30% of global oil production, daily production, about 30 million barrels, which is now dropped with Angola pulling out. In itself, that's about 27. So there's a lot of jittery position across board. And Nigeria needs to pay attention so we're not caught out in the cold in the participation and alignments and realignments.
Yeah, because I'd like to take you back to the issue of Angola and your exit from OPEC. As African producers, how does that weaken how does that affect our bargaining chip power as a bloc?
No, it actually has its pluses and minuses, but okay. Nigeria could take more of the plus away. Look, if Africa's contribution, Angola's pulled out, it tells me that Nigeria doubling and redoubling its efforts in filling the gap in OPEC, and we could have a better negotiating stand with OPEC that Africa as a whole must contribute. If you look at the dynamics of the last 2 weeks, Africa's actually being taken the short end of the stick and been the major problem to OPEC. Look at Libya. You've got about 250 to 300,000 barrels knocked out from the Sahara field in Libya. Look at Angola. Angola's pulled out completely. That's about 1.1 to 1.2 million barrels off. So Africa's contribution of about 1.5 to 1.7 million barrels is come up to the OPEC basket, and that in itself creates an opportunity for Nigeria to try and negotiate to fill that gap, but also creates a large problem for OPEC looking at their negotiating power is diminishing.
Yeah, but when you look at Nigeria, and we've had perennial historical challenges in terms of how we meeting up our own quotas already first. How do you think we should be pivoting in the market at this time, also to surmount some of the challenges that we're already facing?
Look, the challenges we're facing they're not new. Security challenges, which the government of the day is dealing with by negotiations, cajoling, and working with parties concerned. Also heightened security being increased around this critical infrastructure. There's a second important part that people should not forget is we are in a world that's sending mixed messages around decarbonization. Plus, financing fossil fuel is also a big issue. So if you look at all the critical areas, Nigeria is facing a problem, but those tasks are easily surmountable because if you have committed operators, committed regulators working in tandem with government and the national oil company, I think Nigeria is seeing a turnaround like we're seeing now of what's happening.
Yeah, we'll come back to the issue of Nigeria in a bit, but I'd like to first go to the global demand and supply dynamics that we're seeing at play. In fact, from the year 2020, we've been used to seeing shocks, different types of shocks play out across board since post-COVID. And I'd like you to speak on what we're seeing play out now with the disruptions that we're seeing play out with the Houthi rebels on one hand, and also the fallout of the Israel-Hamas war, and how all of that impacts on the demand-supply dynamics?
Look, first and foremost, the demand and supply dynamics taking Russia, Ukraine. Then you have the Hamas and Israel position. But the major stumbling block, the Houthi rebels taking on vessels crossing the Red Sea. Now, that is a big problem, because if you have tankers having to load in this part of the world and the Middle East, trying to go to the global markets, and there is a lot of problems security-wise, that means global receivers of commodities from this part, of crude from this part of the world, are going to be very suspicious and on alert. So they're looking for alternative suppliers, and this is where West African suppliers could take a good chunk of the market, because their crude could be diverted to some of those markets. That is why you see Saudi Arabia coming up and trying to sell at a discount to some of their traditional suppliers, so they could retain their market share because of the security situation in the region.
Yeah, definitely a lot to play, but I would like to address one more issue before we round up this conversation, which is the issue of pricing and the outlook for pricing in the market right now. It seems like $100 oil is not looking likely this year with the projections that we've seen come out so far.
No, I'm not going to bet on that. It's so possible. Look, first and foremost, we have an election coming up in the United States. Very high oil prices is not conducive in an election year, because the American public are very sensitive because of the amount of cars that are driven daily. That's one side. Europe is the opposite, because Europe needs a lot of oil because of the disruption Russia-Ukraine with the gas situation. Lots of power plants are now using other types of fuels. Asian tigers and Asian economies are growing, albeit slowly, and we don't know what's going to happen in the next 3 months or to 6 months, because we see a lot of easing and financial easing globally. So every economy is trying to grow, and if India, China, and those large industrial economies starts growing, consumption is going to go up. So in balancing each other, I still do not rule out $100 oil, but my bet today is pricing between $75 and $85, which brings me back home. Nigeria has a mega opportunity today to fill the gap Angola is leaving within OPEC, and having to build up a negotiating tool for itself and its economy that needs a lot of dollars, which is derived from our export of oil.
Yeah, because it's a very rare opportunity for Nigeria, talking about the Angola's exit, but we still have our own Achilles heel to deal with here, and talk about oil theft and challenges in our region.
Look, the challenges in Nigeria, we should stop. Look, it's important, but I think a lot of the producers in Nigeria, be it the international oil companies or the local oil companies, we need to look past that. Take the government on their words, NNPC on their words, in having to deliver adequate security apparatus and infrastructure in securing, and let us, the oil producers, get on with the work of the day in trying to make sure Nigeria is hitting its targets and producing more oil, because it's needed to sustain and continue to build up the Nigerian economy.